Hey folks, welcome to my new series on my new dividend investment portfolio. In this video, we're going to talk about the why, right? Why am I creating this dividend investment portfolio? Why am I even making a YouTube series out of it? Then we're going to talk about the January 2025 progress report. How did this portfolio perform in January? What are all the actions that I did in January? And then we're going to talk about what's next, what's coming up in the following month of February. And just a reminder, this video is not financial advice, so do not copy me. Don't do what I say. Probably should do the opposite of what I'm saying because I have no idea what I'm doing. So yeah, just a disclaimer there. Next slide. So the why behind the dividend investment portfolio. Why am I creating this dividend investment portfolio? Well, number one is passive income. And really, the goal is to have income irrespective of market performance. So, one of the nice things about dividend stocks, if you choose the right stocks, right? So, regardless of the market, having swings, going up in value, going down in value, you can at least rely on these stocks to pay you, a consistent dividend income stream over a period of time, right? So if a stock pays 5%, let's say it pays 50 cents and it's worth $10, regardless of whether that stock goes down $1 or goes up $2 this year, you're still going to get that 50 cents, hopefully. So it kind of provides that stability, stable passive income in a sense. And one of the goals with that is to have that income fund your necessities. So we all know that, highest expenses of any household is, going to be your housing, your transportation, your food, groceries, things like that. So ideally have this income grow to a point where it can actually fund your necessities, and then ultimately have that grow even more so it could eventually replace your primary source of income. So if you wanted to, you no longer have to work your full-time job or pursue your business unless you really want to. And number two, to reduce risk, right? So when you get to a point where you might have $1 million, 2 million, 3 million, multi-million dollar portfolio, it's going to really hurt if the market goes down 10%, right? If the market tanks. So to kind of diversify away from that volatility as your net worth grows up, it helps to diversify into what I call value stocks, right? Stocks that, they might not be as volatile as growth stocks, as tech stocks, but they're at least going to be consistently paying you this dividend income stream. So even if the market, even if you have $3 million and the market tanks and it goes down 300K in value, hey, at least you have a dividend investment portfolio that's consistently going to pay you income regardless of the fact that you're now down $300,000 in your portfolio, right? That's kind of the mindset here. So yeah, again, prioritize value, not growth. That's one of the goals here. And just as an example, right? So even among this dividend portfolio, we're going to try to diversify. We're going to have hopefully different sectors. So let's not just go all into telecom or real estate. Let's maybe go into pharmaceutical, things like that, right? So really diversify your sectors. That's one way we kind of mitigate the risk here. And then kind of look for these companies or these stocks that have sustained performance. So not necessarily just a reliable, sustained dividend track record, but also the value of the stock, right? Because if the value of a stock just goes down over time and it's consistently paying dividends, there's gonna probably come a point where they're gonna end those dividends. They're gonna have to change those dividends, and that's not what we want. So just kind of tracking sustained performance through different angles for these stocks. And then again, less volatility and more stability is what we're looking for. So that's kind of the why behind the dividend portfolio. So all of these reasons kind of make up the why. Now, why am I making a YouTube series out of it? Number one, to document my journey for myself. So 10 years from now, 15 years from now, when something actually comes of this or it becomes into something greater than I imagine or I hit my goals, I want to be able to revisit my decisions, right? Why did I choose to buy a certain stock? What was my reasoning at the time? And then how did it perform as a result, right? Just kind of having this retrospective review of the why. It always kind of helps. So really it's just kind of documenting my journey. So I would do this regardless of whether or not someone's watching the video. Number two, I'm actually documenting for you as well if you're interested, right? So if you don't have a dividend, investment portfolio, then maybe this is going to inspire you to make one. Or if you have one already, maybe it's going to give you some ideas in terms of what kind of stocks can you buy and things like that, right? So just kind of generating ideas for you as well. Number three, to help build the community. So I'd like to have a community that comes out of this where we encourage engagement, right? Bounce ideas off of one another. And that could be in the comments section in YouTube or Instagram. That could be a Discord channel that we set up. It could be local meetups. I don't know. It could be anything. But really, one of the goals here is to build a community out of it. And then number four, to sustain wealth together, right? So the way I see it, this is a journey. You're going to follow along. Hopefully, if you don't, that's fine. But we're all going to kind of grow our portfolio together at a consistent pace. So one of the things which I'll get into in the next slide is I'm going to be funding this consistently every single month, right? So hopefully we all do that, and then we maintain a mix of net worth and income. So we're not just chasing income here. We're not just chasing net worth here. The goal here is to have a mix of both. So hopefully you want to sustain your net worth while having this machine consistently spit out money, so you're not losing net worth, but you're also getting a consistent income stream. So again, that's one of the goals here. So that's the why behind the YouTube series. Moving along here, the strategy. So again, I just kind of talked about this a little bit. So I'm going to be funding my account about $1,000 a month starting in January of 2025. So by the time this video comes out, it's going to be February. I would have already done that for January, and that's what we're covering here. So I funded this account in January of 2025 of $1,000. But we'll get into that actually in one of the next slides. But this is the strategy moving forward, right? So we're going to fund $1,000 a month. Two, we're going to identify criteria for strong stocks. So hopefully I want to know exactly what I'm going to buy when I have that extra funding. Whenever I have that next $1,000, I know what's next on the list, right? So it's almost like this criteria of, hey, if this stock is below this price, that's what you want to buy next. And basically kind of stack rank them in a sense, right? This is grayed out because I haven't yet gotten to that point, but that's kind of the goal here. Number three, strategically execute purchases. So again, we're funding $1,000 a month, which is a form of DCA, right? Dollar cost average, but I want to do it in somewhat of a modified way. So I'd like to call it a modified DCA. So traditionally, you would just fund and purchase $1,000 worth of whatever stock on a fixed date every single month. So in this case, let's say the last trading day of every single month, you purchase $1,000 worth of stock. I want to change that up a little bit, right? So for January, for instance, well, I didn't get a chance to do this in January, but let's talk about February. So in February, I'm going to have this $1,000 funded on, February 3rd, February 1st, whatever. And when I see a good buying opportunity, right? Let's say it's a red day. Let's say the market adjusts, claws back like 5%, below market, and I see some stocks that are lower than they were before. I'm going to execute right away, right? I'm not going to wait for that last day of the month just because I think it's a good buying opportunity. So it's kind of like timing the market, but it's also you're still complying with DCA because you're still buying $1,000 worth of stock in that particular month. You're just kind of deviating the exact date based on what you think might be a good buying opportunity, if that makes sense. And the second part to that, obviously, for that to work is we don't hold on to cash, right? So come last day of a particular month, whatever cash I could possibly invest that's reasonable, I will invest, right? It's not like you're ever going to have over $2,000 in cash sitting unless it makes sense. Because right now with Fidelity, if you saw the last video, the money market does pay 4%. So it kind of makes sense to have it. But again, the goal here is to just consistently execute every single month. That's the whole purpose of dollar cost averaging. Number four, to identify success metrics. So again, when we talk about the criteria for strong stocks, I want to be able to establish some metrics where we can quantify what qualifies as a good dividend stock, right? We can't just base it off of the dividend yields, right? So because if a stock is 5% yield and the stock consistently drops in its actual value, that doesn't really help because that's tanking my net worth, right? That's not really building income. That's just kind of exchanging income because it's me taking money out of my portfolio in the form of dividends. Now I have to pay taxes on it. It just doesn't make sense. So it can't be just dividend yield. It can't be just the growth value of the stock. It has to be kind of a combination of both. And then, how diverse is my portfolio? That might be another overarching metric that we track. And then, just a lot more to come. This is going to be very messy, right? I know there's tools out there. I know there's portfolios out there. There's models out there. I'm going to be very naive and just do this from scratch because I feel like I could do a better job, but it's just more fun that way, right? I don't want to copy someone else's model. I just want to start with the basics, with absolutely nothing, with my own basic metrics, and then grow from there. So hopefully you like that. Moving along here. So now we get into the January 2025 report. So what happened in January? And hopefully we can do this every single month. But to start off, what was my dividend income? It was a whopping 42 cents. And the reason why it actually didn't have any dividend income at all, this was actually the interest payment from that money market account that we funded. So I funded $1,000, and I think it was like mid-January where I funded it. So I ended up getting 42 cents the last day of January. So not really dividend income, it's really just interest, but what the hell, I just put it there anyway. Number two, how much did I fund? So again, I funded $1,000 in January. What I did next, what purchases did I make? So I purchased Realty Income, the ticker O, and I also purchased Verizon because I think it for starting off, I think it was good because Verizon pays a consistent dividend, and we're not going to get too much into that, if you want to call fundamental analysis just yet. But I felt like Verizon was very well positioned. Their price right around $40. From that standpoint, I saw. I think the value might grow over time, and it's going to pay between 6 to 7% yield based on the current cost basis that I paid. So not bad. It is a quarterly paying stock, so that's one thing. With Realty Income, again, this is, I think the price was fair. I forget what the yield was exactly. We'll go into that a little bit shortly. But this pays on a consistent monthly basis, so I thought it was a good way to kind of diversify that way. At least I have a monthly dividend income coming in. So only these two shares. I'll show you the exact transactions shortly, but those are the two tickers that I bought. Current account value. So at the end of January, it was worth $1,028.60, everything considered, which you'll actually see here, right? $1,028.60. And then the current cash position. So I actually didn't spend all of that $1,000. I kind of left it, but then I forgot to buy it. But yeah, that's kind of one of the rules we're going to try to, play by, to kind of invest everything by the end of the month. So clearly I did not do a good job of that, but we had about $200 left over, as you could see. So that's my current cash position. And then just some baseline metrics. So just to kind of start off with what things that I would like to track to kind of gauge how we're performing over time. Number one, 12-month forward dividend yield. So if you look at the screenshot, I'm not going to go to the portfolio just now, but based on these two tickers that we bought, the cost basis that we bought at, things like that, it's going to be paying $52.44 over the next 12 months, give or take. And I have an asterisk next to it because to compute this percentage, what I should actually do is, because I only bought $800 worth of a combination of these shares because I had $200 left, this percentage would actually be higher. But I thought it was only fair to count, to track based on the account value that I put in. So I put in $1,000. So that's why you see 5.24 and not a higher number, because I think it's more fair to say, hey, I funded this account $1,000 and this is what I expect to get out of it. Not to mention the interest is going to add up over time because we do have currently that 4% money market yield. And then the portfolio growth rate, right? Because these stocks actually grew over time. Again, I'll throw a screenshot up there. But since I've purchased these, and it was by the time it was, January 31st, the value of these stocks grew as well, about 2.86%, looking at the, $1,000 as a benchmark again, not the actual $800 value here. We could play with that in the future if that's better to track it that way, but this is what I did for the time being. And then the third metric here, let's look at the consolidated value, right? Because if my stocks are going up in value and I'm getting dividends, I want to be able to count both of these to actually see my return on investment. So if you combine all of these, that $52.44 and then this $28.60 or so, and divide by 1,000, you're going to get that 8.1% number. So that's the total yield, kind of looking down 12 months and assuming that these values, right, this 2.8% that it's appreciated is going to stay 2.86%. It could be higher, it could be lower, but based on what I see now, this is kind of the forward 12-month yield, all things equal, if that makes sense. Moving on. Next step. So that kind of covered January, but what are we doing in the next month? So I'm going to fund the account and I'm going to automate so it automatically, deposits $1,000 a month so we can have this on an ongoing basis. Then I'm going to identify the next stocks to purchase so we can continue to diversify. I don't want to keep buying Verizon and Realty Income just yet. So I'll probably try to find, what's next on the list so we could kind of diversify maybe industries or things like that. Don't know yet. We'll see. And then try to time best buying opportunities. So there's obviously a lot going on with volatility, especially in the US market, especially with all the executive orders, tariffs, a bunch of stuff. So definitely expect some volatility there. And I would like to make purchases when there's a buying opportunity. Now, it is a double-edged sword because these tariffs would probably impact the long-term success of the underlying values of these companies, but let's just play it by ear. I'm just gonna do this blindly until I figure out a system. So let's just run with it. Number 4, come up with metrics for consistently picking favorable stocks. So I know we talked about a bunch of things, right? We want to, be able to quantify this. So stocks that sustain their value over time, as well as a consistent dividend payout, as well as being diversified, and probably a number of other things. So more to come on that. But those are kind of the next steps that we want to kind of start to do to more formalize this process. And let's see, and that's about it. So thank you for watching. Be sure to subscribe to the channel and follow my socials in the description for more. So that's going to be Instagram, that's going to be a blog. I'm going to be putting together a stock portfolio tracker where you can actually see month by month and track things. And if you want to get some ideas, do that. We'll see where it goes, but definitely would appreciate you subscribing. If you have any ideas or questions or anything, be sure to leave them in the comment section below, and I will be sure to get back to you. Thank you so much for your time, and I will see you on the next one. Peace.